Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today's Thursday. It's June 23rd. The market's going to open up in about an hour and 36 minutes to be specific with you. And as you can see here right now, the Nasdaq is up pretty good, about 120, and the Dow's up 163. Now, yesterday we were down pretty good, but we made up for it and actually closed positive on some of the indices. That's a good sign. The fact that we're up today is also really good. Now, before I begin, I want to bring your attention to something today that you might have missed if you're not in my VIP room. There is a cyclical play that's happening between the end of today and the next 6 days in the Russell 2000, and it's about 75% accurate. And the play is basically there's a reallocation, a restructuring of the Russell the last week of June. So it's 75% accurate. I don't know if it's going to happen. I don't have a crystal ball, especially not here. I have one at the office, but I'm just kidding. The point is, there's a cyclical effect last week of the Russell that it goes up higher than usual 75% of the time. You would buy at the end of the day today, and you would close it 6 days later. So first opportunity 6 days later. I think it's the first chance in July. Not sure, maybe still in this month, but basically the next 6 days. You buy at the end of the day today, and you hold for the next 6 days, and it's supposed to be a good play because of the sector, not because of the reconstruction of the Russell last week of June. So don't forget that. That's very important. Aside from that, I like this consolidation that we're seeing, and I'd love to see the Russell go above 174. That's going to be the first major sign of resistance. So very much focused on the small caps right now. On the SPY, let me give you that level as well. On that SPY, that level is 385, let's just say. And on the Dow, let's see what that number is. On the Dow, that number is 311. So if we can, or 31,100, if we can break through those levels, things would be much better. Now, what I'm really liking right now is the fact that the long bond, even though Mr. I can't predict the future till I'm going to get reelected, Mr. Powell, you know who you are, he said yesterday that America may actually go into a recession, and the market rallied on that, and the bond market rallied on that. That's very positive, and that's telling us that the majority of this craziness that we're seeing is in fact priced in. This is the range that the bonds have been, and we've only took out of that range in the last 2.5 months, 1, 2, 3, 4, 5 sessions. We're now back in that range. That's telling me that stocks are going to get strength or stronger because even the bond market is not assimilating higher long-term rates at this time. That's very significant. Another significant factor is over the last 5 days, energy stocks have not been leading. Oil. What's been leading has been medical stocks, healthcare stocks, and that's very solid. Also, solar stocks have been getting some love. Remember, on Monday, Biden took away the sanctions that Obama put into place for solar panels made out of this country. So that's really going to help solar panels. So the bottom line is things are starting to strengthen, even though if you're not seeing it on the long-term view, it's clearly happening right now. If you look at the major indices, you will see the consumer discretionary has been the strongest one in the last 30 days. That's insane. Energy, basic materials, and utilities have been the weakest. Technology was all the way up here. So this is telling us that markets are, in fact, changing their directional bias. Very significant and very important. Now, we do have jobless claims today. That number comes out at about 32 minutes. And that number is expected to be somewhere between 215 and 235,000. I'm hoping that number will be about 225. The number has been fairly in line with estimates, so I'm not expecting anything major or crazy to happen to bring it out. Again, if it's somewhere in line, things should be okay. But the bottom line is look for jobless claims. They're coming out in 32 minutes. You'll probably get this right around that time. Not expecting the number to have a major impact on what's happening today. Not a lot of stuff on a global level. Asian markets gained after the Federal Reserve Chairman yesterday said a recession is possible as the U.S. Central Bank raises interest rates to cool inflation. Oil prices fell by more than $2 because a recession wouldn't be good for oil, even though oil prices are historically undervalued right now. Last week, the Fed raised its benchmark by 3/4 of a point, the 3 times its usual margin. On Thursday, Philippine Central Bank raised its key quarter by 1/4 percent point, while Indonesia left rates unchanged. The Fed policymakers say they anticipate more rate hikes this year and next as quicker tempo than previous forecasts. But that's priced into the market. And look at the bond market. It's taking it. It's completely assimilating all of it within its price, which is pretty remarkable. Surging prices have soured consumer sentiment. The world's biggest market, retail spending, is sagging. But I'm telling you, I'm not seeing evidence of major sag, and the worst may be behind us. Inflation fears have been aggravated by a spike in oil prices, wheat, and other commodities due to Russia's attack on Ukraine. So right now, the biggest factor I would look at is more speculative sectors making higher highs and defensive sectors coming down. Now, if you look at the chart, which we will right now, consumer sentiment is looking real strong here. It looks like it's bottoming out, at least for the time being. Consumer staples looks like it's found the floor. Healthcare looks like it's could potentially be moving a bit higher right now. Technology looks like it's bottoming out. Communication services looks like it's creating a base here. A lot of these stocks and a lot of these sectors look like they're creating a base. Energy looks like it can be, it's due for a real nice bounce around these levels too. But most of the stocks that I'm looking at and most of the sectors are looking really strong. Now, if I was a betting man and if I was looking at one sector that I believe is going to give us a run for its money, at least that's what the charts are telling us right now. And sentiment, it's healthcare. Healthcare has been outperforming. There may be some positive signs in the healthcare sector over the next couple of months. And remember, healthcare is a fairly neutral sector. In other words, if economy slows down, it's not going to impact healthcare too much. And if economy speeds up, it's not going to impact healthcare. Healthcare is one of those industries where minus elective procedures, healthcare and biotech and healthcare are coming together as well. So there is some love for the healthcare sector over the next couple of weeks. I think this sector is going to be the first or maybe second to hit the 200-day line, but I'm definitely liking this sector. And the heat map, again, look at the 1 month. Medical, drugs. Let's look at the last 5 days. Large cap pharma, biotech, medical supplies, biotech. See that? I'm not just imagining this. So there's a lot of love in biotechs. So top ETF is definitely the healthcare. And if you want an option for it, let me give you an option. I would go to September, and I would go to the 120. Let's see where we're at. 124 or 125. One of these. Their spreads are pretty good. You're not going to get ripped off on either of these. Open interest, they're both pretty fair valued, and the spread's not too bad. So you would be okay. I would wait for the market to open before getting in on them. But the 125 looks really, really good around this level. Actually, the spread is quite wide on it. So wait for the market to open. It'll narrow out. But I like this sector. It went up yesterday. It's going up today. On the heat map, large cap pharma, biotech, dental supplies, biomedical, drugs. You see that? Numbers don't lie. Also, I'm really liking the fact that volatility is not reacting and the fact that the bond market is now moving sideways. That can give stocks a lot of strength in the short term. Now, did you know that there's a way to hack the stock market by legally spying on trade ideas from high-profile company insiders? I love this. I'm talking about a signal that has already identified over 80 unique stock rallies since 2020. In fact, New Money Crew head trader Lance Ippolito, he's been using this signal for more than a decade. He's confident anyone can pick it up and start implementing it. So he's hosting a training session at 11 a.m. Eastern Time, June 23rd, that's today, to show everyone step by step how it works. You don't want to miss out. 11 a.m. Eastern Time, today, June 23rd. Click the link below. Learn more about this insider activity and how to get notified on moves like this. You don't want to miss out. And follow the link below. You don't want to miss out Lance. He's been in a red-hot roll lately, and you want to check out what he's got in store for you. Tomorrow, weekly recap, biggest winners, biggest losers of the week, what to expect next week. And I'm seeing a little rally here over the next several days. There's a 75% chance that the small caps and probably the large caps will rally over the next several days. The key is to buy at the end of the day today and sell 6 days later. 75% accuracy. I'll talk more about it in tomorrow's video. Bye, guys. Have a great day. Post some comments, love letters. I haven't heard from you in a long time. Support at marketgeeks.com. Bye.